Well, I make a joke about you, leaping over a tall building, as you say, but really, it almost seems like it would take Superman to build the company that you've built in such a short period of time. Maybe it'd be good to have a little bit of background about where you came from, what you saw as the opportunity when you started Grassroots, and really just give us a short and sweet, synopsis of how you ended up here.
It's a great question. I'm not sure I actually believe we're actually here. And if you go back and talk to people in my past and say, who was the most unlikely person to get into the cannabis business, I probably would have been on that list. That said, my partner walked in my office 4 years ago and said, let's do this. They just passed a law in Illinois about 5 years ago, actually. And after spending a bunch of time doing research and came to Colorado and California a number of times, we just saw an opportunity we thought we couldn't pass up. And, one of the, very, very short story that people who've heard me speak before have probably heard me say this, but I grew up in a house where my dad looked at me when I was in high school and said, "You don't ever have to worry about the cops finding it if you have marijuana, because if I find it, I'm calling them on you." And I actually believed he would have. And then when I sat down with him and talked to him about this opportunity, his view, he said very simply to me, "If you could find me something to help my arthritis, I'll take it, whatever it is." So as silly of a story as that may be, it was one of those moments where we kind of looked around and said, if he's going to change his view on this, the whole world will evolve. And I think that's what we've seen over the last 5 years, to go from, at best 50% support of the medical programs to almost 90% support of the medical programs today. So we're excited to be where we are, and fortunate to be where we are, and fortunate to have begun to put a terrific team together to get us where we are.
All right, so your dad has arthritis. Sounds like he's a customer for certainly at least for medical cannabis. A lot of folks come into cannabis that have never used it in the past. They have a lot of questions. I know your background, real estate as well as retail. I think one of your calling cards at Grassroots is that you've really set up really beautiful retail footprints, catering to those folks that maybe hadn't necessarily had access to cannabis in the past and in certain states. Can you talk a little bit about your strategy and how you really build out your stores in a community to reach folks like your dad and others, and who are you trying to reach?
So, we take a slightly different approach, we think, on the retail side than many out there. There's certainly a whole lot of stores out there that kind of take the Apple Store approach, if you will, kind of very clean, not a ton of service necessarily, but visually really exciting. All of our stores really are built much more like wellness facilities than they are like an Apple Store necessarily, and we're trying to create a community within our stores, within our dispensaries, for our patients, and really serving the whole patient, if you will, not just selling them cannabis products. So we have wellness facilities in every one of our buildings. We offer free services such as yoga, Pilates, cancer support groups, MS support groups, things as across the list of first-time user opportunities, and teach people how to roll a joint if they need to, have never done it. So really the gamut of...
Do you teach those classes personally?
For sure not. I flunked that class. So we do really view this as a community, and want to build a comfort for folks. One of the things that, if you look at the statistics out there, the female consumer in particular is uncomfortable with walking into a dispensary. And if you walk into the old-time dispensaries, some in California, some in Colorado in particular, the older ones have been around a long time, you understand why people can be intimidated by that experience. So we're trying to create the exact opposite of that and be very attractive to our entire patient base and our entire customer base.
Well, I suppose there's a lot of qualitative analysis that goes into making decisions on who you're serving and the products that you're carrying. But there's also a lot of quantitative analysis that's necessary. Tell me a little bit about the data that you're looking at. How are you evaluating what products to carry, where to open? I mean, I just really am curious how you're making decisions on what you put on shelves in your stores.
It's a wonderful question. It's one of the single biggest frustrations for, I suspect, most operators in this business. The quality of the software in this business is not yet at the level it needs to be at, and not at the level, quite frankly, of most other retail businesses or most other wholesale businesses. There's a number of folks who are trying, I think, and trying to create better systems. The systems function mostly, and again, the operators in the room know what I'm talking about. They just don't really function the way they need to. So we have a couple of initiatives that we've used over the last number of years to do this. We actually have a couple folks in our office who function as computers, if you will. They take the data and create reports for us on a regular basis so we can look at actual information and try to make more intelligent decisions and make decisions based on metrics, not just on anecdote. At the same time, we are investing very, very heavily, probably our single biggest investment beyond our people and our facilities, in data analytics. We have an outside firm that's helping us build our own data analytics within our company so that we can really segment our customers and segment our data and look at it from a very metric-driven way and continue to create what we have in our business, and which is a metric-driven culture rather than an anecdote-driven culture.
Well, anecdotally, it seems that the acronym, I suppose, on everyone's lips is CBD, right? Tell me a little bit about your perspective on CBD in the marketplace right now. Is it a little overhyped, or do you feel that there's still opportunity?
It's funny. I look at this business and I say, I'm not sure I've seen anything be as explosive as the cannabis THC business has been over the last 5 years to have grown the way it was, except I think the CBD from hemp business is going to eclipse that in terms of speed and craziness as it's grown. You literally, in almost any state in the country today, can find it in every gas station, every grocery store, every convenience store. I think that there's a whole lot to continue to shake out in that regard. I know that if you have watched the news, you see both the FDA and the New York State Department of Health shutting people down for serving CBD. I think we need to understand whether there's going to be regulations around CBD or whether there isn't. And from our perspective, as a very regulated industry, we would love some regulation around CBD because I think it needs it, and I think that there's too many folks making CBD products around the country. I suspect none in this room, but too many folks who are making claims that aren't accurate. And there's been a bunch of tests of CBD products that have shown them to be not what people say they are. So I think there's a lot of people making great products. I think CBD is an incredible piece of the puzzle that I think fits in nicely with what we're doing on the THC side. And obviously there's CBD in plenty of the products we sell in our stores. But I think we're in the early innings. I think people saw the Farm Bill pass and assumed it was just a free-for-all from that point forward, which it is today. We'll see whether that gets reined in the next little bit here.
Interesting. You mentioned in your commentary on CBD, you talk about the regulations and the Farm Bill and federal regulations, but taking it down to the state level, we see you as a multi-state operator acquiring licenses in limited license states. There's significant opportunity there as well as in other states with more free market mentality. Maybe I think it'd be interesting to hear a little bit about your perspective on how you've built your portfolio. There was a discussion downstairs that Brian was so astutely pointed out, a little bit of the uncertainty surrounding New York and Florida and elsewhere. But I think it'd be good for our entire audience to hear a little bit about how you're looking at acquisitions, where you're looking at acquisitions, what you find attractive, really what are the metrics, like you said, that you look at and where.
Sure. So we have, we've had the good fortune of building a team and having a team in-house that has been tremendously successful at winning licenses, which buying things is great. Winning them is a much more accretive way to grow value in our business. So, we've built, for example, we have, of our 46 dispensary licenses, we have 34 of them that we've won through application processes and only 12 that we've had to purchase. We hope that continues. We're obviously working hard to continue to build that team, and we'll see as the new states come online in that regard. But as you said, M&A is certainly a big part of our focus the last 6 months and the next couple of years for sure. I think my own view is you're going to see 2019 be the year of M&A in this business. I think you're going to see a ton of it, both from large multi-state operators, maybe some combining, to a lot of brand folks that I think will put themselves in play and be partnered up with various operators of one kind or another. So I think you're going to see a ton of M&A. In terms of how we look at, we really look at M&A from a couple of perspectives. Our first and most important aspect of M&A for us is to fill in existing markets. We believe scale in every state that we're in is massively important. So we are in the midst of filling in, for example, in states we don't have the quantity of licenses we do in Illinois and in Pennsylvania and Vermont. We're looking to fill in those other states, places like Ohio and Maryland. You'll see us do some strategic partnering and acquisitions and management agreements with folks in those states, so we can get the scale we want in those states. And then in terms of new states and opportunities, our team headed by Brian is looking at all kinds of deals all over the country. We certainly love limited license opportunities because we do think that's the single best way to create value, are those limited licenses. But at the same time, we look at a place like California, which is by far the largest cannabis market in the world, and we're very excited about opportunities we're seeing here, trying to find the right opportunities in California that include the right team, because we think this is a market where the team is almost as important as the asset is, which I think you've seen in some of the acquisitions that other folks have made over the last little bit here. In terms of metrics, that's a bit tough necessarily to talk about out loud. I think we try to look very carefully at every transaction and look at it on its face to understand the ramp that they're going through, because this is such an initial early phase of the business. And, we certainly would like to keep things, if you will, under 1.5 times revenue. But again, that depends so much on the specific industry and the specific business and the people and where they are in their cycle. So we're looking for great assets and for great people, because at the end of the day, as people ask me what's the hardest or most important part of this business or the hardest part of the business over the last few years, the answer is very simple. It's people. The hardest part of growing this business has been people, and the best part of this business has been the people. And frankly, we could not have grown to the scale we are without having built just a terrific team. And we're continuing to do that and continue to add folks as we need to.
In that answer, you mentioned a little bit about M&A activity, and there's brands out there that are being in play and acquired. I think I saw an MSO acquire a brand a couple of days ago. You're vertically integrated. You can certainly produce at a lower cost typically than you would see, smaller companies, perhaps operating a brand. But then you also you have your own house brands, right? And you're also working with a lot of external third-party brands that you're retailing. Where do you draw the line, in promoting your own brands in your stores versus, going out and looking at acquiring third-party brands, or just having an arm's length relationship, transactionally, and carrying them on your stores?
So we do have great relationships with cultivators and producers in every state that we're in. The majority of our products today in every one of our stores comes from other folks, not from us. That's really our strategy.
Is that a large majority, or just?
I think our stated strategy is that we expect in the ballpark of 35% of our products to be our own products on the shelves. Ultimately, we don't have a full complement of products in some states yet, so that's different in each place we do business. We really view 4 separate verticals that we're in the business of today. We're in the business, we're in the farming business, we're in the manufacturing and production business, we're in the retail business, we're in the brand business. And we view each of those verticals as very independent businesses. Obviously, we have a lot of resources in Chicago to make sure we connect those verticals the right way. But the retail business is run like a retail business, and if we're going to be the best dispensary in the country and the best dispensary in every market we're in, we have to have the best products. And we think some of our products are the best products, but we're not foolish enough to think we're the only guys who make great products. And we want to fill our store with what the customer wants, and that's what our job is on the retail side. So we actually give no preference in selling our product wholesale in those markets to our stores. Our salespeople are selling it to everybody at the same time, and our stores kind of buy what they choose to buy. Obviously, there's a lot of connection here, but we really view it as an independent business, and I think it's the right way to think about the business to really create the best retail environment.
So you said you look at the business as 4 different verticals. There's the cultivation, the manufacturing and processing, the distribution, and then the retail. Is that it? Did I just get those right?
I think you missed brands.
Brands. Yeah. Okay. Yeah, that's right. Processing, branding, retail, and cultivation.
Farming, manufacturing, retail, brands.
All right. So let's take them one at a time. Let's start at the source. What's the biggest challenge in each? Cultivation.
I think the biggest challenge in cultivation is a combination of just capital needs, and that's part of the business, and trying to see where we think that's headed, because we do believe that gets commoditized in many states fairly quickly. So you want to control your capital costs in that business, and obviously it's a living, breathing, and dying plant, and you got it. It's a challenge every day to to have that building run efficiently and make sure we don't lose rooms for various issues, because everybody faces issues in those rooms. But at the same time, to run it like a manufacturing facility and to create accountability from the growing team, which is certainly not something that before the last couple of years has been a normal part of that business.
And so what about the biggest challenge in processing?
I think for us the biggest challenge in processing is human capital. It's finding the right people to come up with and create consistency in our products on a daily basis, which I think we've done a great job of, but also to find innovative products and to create new ideas and be thoughtful and excited and interesting. And that's, the future of this business is new and innovative products. And go into the grocery stores. I like to tell our team, we go to the grocery store, every single product on those shelves can be spun one way or another with cannabis involved in it. And part of our job is to find new and exciting ways to deliver cannabis to the customer on a regular basis.
Well, let's keep going. Branding.
So branding, I think, is, in our view, is one of the two real key components and long-term value creators in this business. I think that the great majority of brands in this country today in the cannabis business are not really brands, they're products, and people are just beginning to try to understand how to create brands and build brands. We're fortunate enough to have been able to bring Lisa Hurwitz into our team, who's a former Kimberly-Clark person, just a terrific CMO, who's changing our whole analysis and thought process as we build our business. So, I think it's a critical component. What makes this conversation particularly interesting is where we sit today, because I do think that California is the center of what we kind of talk about as mind share in this business, and we do think that a great many of the brands that will ultimately be successful in the country will come out of here, and the brands and the people that are creating them are really the biggest asset that I think will ultimately kind of work their way across the country in some logical way. And we think with some of the larger MSOs, we'll be very, very involved in that process.
So then if you're looking at California for brands, and would you say that you're out looking at acquisitions? I'm kind of curious. I want to ask you what the biggest challenge is in retail, but in this answer, you're really unlocking even more questions about your acquisition strategy, about how you're looking at going out and continue to build a larger footprint and establish scale, your priorities. I'm so curious about just like the capital markets play. You talk about your access to capital being tremendous for cultivation, and that drives your strategy, of course, if you're going to stay private, if you're going to go public. I'm jumping around a lot, but there's a lot to bite off on there. So what do you think? When you look at California, is it a brand play, or is it
Listen, as I said, I think California is the largest cannabis market in the world, and I think we would be foolish and probably wouldn't be doing our shareholders justice if we weren't focused on trying to find the right acquisitions here. The business here has been operating for 30 years in one form or another: gray market, black market, white market today, however you want to describe it. We think California is a place where the assets we're interested are one piece of the puzzle, but the right team who understands California, who's been here, operated maybe illegally for a while, now has made that transition, understands how to operate in a compliant manner, and can lead our effort here and be part of our team. We think that's a super critical part of any acquisition we make here. We're certainly looking at transactions that are licensed transactions here, and I think we would. We're certainly looking at brand opportunities. Brands are a challenging conversation today, as I said, because even if you look at the transaction that was announced the other day, they have a terrific brand in California. It is meaningless outside of California, quite frankly, other than to the folks who are in this industry. So part of this is trying to figure out what will be successful in other places and find the right team and the right combination so you can, so we can make that part of our organization and take it to today 11 states and more to come.
So you are raising capital, right?
We are. We're just getting to the end of about a 3.5 or 4 week roadshow. Brian and I are hopefully going to get home tomorrow night and spend maybe the third night in each of our beds, in the last month. So it's been a long month, but very successful, and we'll kind of close the book on a $60 million convert round early next week, we think.
Well, congratulations on that. That's pretty impressive, especially considering the conditions that we've seen over the last couple months in the marketplace. I mean, have you noticed a bit? Tell me about the difference between December versus January in raising capital.
December was a very interesting month for us. We put our convert out on the street in early December. Perfect timing. But really with the knowledge that we were doing it in early December to offer our existing investors an opportunity to commit to us with further commitments, and to do it in a way that, quite frankly, they would be provided guarantees that they wouldn't get cut back if it was oversold. And they know they could make the commitment last year. So we had a really, really good showing from our existing investor base. Almost half of our initial $40 million raise was done with our existing group in December. That said, as you know, we did one very short trip to New York, met with a handful of funds, and most of what we heard was, we love the story, we love the valuation, we think the team is great, but I've been curled up under my desk for a month, so I really don't want to talk to you until January, hopefully. All joking aside, obviously the market in November and December was a challenge. As the market goes, markets go up and markets go down, and you need to be poised and ready to take advantage of those opportunities when they're available. Really thankful to see January have kind of settled the markets down. Mostly seen the cannabis stocks on the rise this month, which has been great. And I think I think that confidence has found its way to many of our investors, and we feel very fortunate to have been able to bring most of our existing investors who came back into this round, as well as a host of new folks who we've just met in the last month and who have been very interested in our business and very excited about the story we're telling.
Well, so investors are coming in on your convert round now. What are you telling them about what's next? I mean, what do you anticipate the next raise would look like? I mean, can you talk a little bit about your forward capital market strategy?
So, we obviously make no commitments to anybody on what the future.
We're gonna hold you to this.
There are no commitments in terms of what the next rounds look like. Obviously, we want to get through this round. We want to continue on the M&A front that we've been focused on, and continue to build out the operational side of our business. I think if you look around the capital markets today, we are, as you nicely said at the beginning, I believe we are the largest private multi-state operator in the country today. I'm not sure what that gets us, other than, if we have $2, we get a cup of coffee with that. But, I think that from our perspective, we're looking for continuing ways to raise efficient, effective capital priced at the right level for us to be priced at. And, I think most people believe the only way to do that today is to be a public company in Canada. That's going to change at some point. Maybe the States Act passes. Maybe that opens up in the United States at some point. Nobody knows when when that timing will play itself out. So we haven't made any commitments. We're certainly looking at a bunch of opportunities, a bunch of M&A transactions that we will use this capital to fund, or potentially do another round if we need to look at some of those opportunities. But we're certainly very, very focused on the capital markets up in Canada and taking advantage of those when they're available.
Okay, very good. So, taking it back to something that you said, and I'm going to wrap it up with this, but I really appreciate that you gave the perspective of how you view cannabis as a health and wellness product, the fact that your retail dispensaries offer yoga and other wellness classes, and really looking at cannabis as an integrated part of a healthy lifestyle, not necessarily just a sin product. When we look at that, it reminds me a lot of like Steve D'Angelo's book, the Cannabis Manifesto, which I'm sure you've read, as many of you have.
I have.
And so we're all here to make the world a better place, through cannabis. I think no one's here by mistake. One of the questions I wanted to ask, and I think our audience wants to know, is, because this is a challenge for everyone in the industry, is, what does social equity look like? How do we try to leverage this industry to better the world and those that have historically been disadvantaged by the war on drugs? And I'm curious your perspective. I mean, if you were king of the world, what would that look like to you? And then also, what programs or perspectives do you have from Grassroots?
It's a great question. I think if I were king of the world, we would have never done what we did and put people in jail for using or selling cannabis. But it's a incredibly challenging question. We are very focused in our business about giving back to the community. We do it on a regular basis in multitude of different ways. I think we're building a very unique platform from a retail perspective to do that. The social equity and social justice aspects of this business are super complicated issues, and they're political at every level, at the federal level, at the state level, at the local community level. We're very supportive in the places we are actively lobbying for recreational bills and other things that are happening. We're very supportive of those bills, including set-asides for certain minorities, set-asides for certain unjustly affected people through cannabis. But again, it's not necessarily our job to lay out those policies. I think that is, for better or worse, the politicians' jobs with help. But I think it's our job to make sure that they understand that we support those things and support them with our thoughts and with our wallet, and make sure that that's a very significant part of what we do.
Well, I tell you, we really do appreciate what you're doing with Grassroots and continuing to expand the industry, the reputation of the industry. Really appreciate you being here and having this conversation with us today. So please, everybody, give Mitch Kahn a round of applause. Thank you very much, Mitch. Thank you.